Hey, thanks for joining us this week. I'm Joe Cordova.
And I'm Brad Zerby.
FHA, in an effort again to bolster its capital reserves, is increasing their MIP mortgage insurance premiums.
And these changes are going to take effect April 1st. Again, no April Fool's joke there. The increase is going to be from currently 110 and 115 basis points to 120 and 125 basis points. Basically, the difference would be the higher if they're putting the minimum 3.5% down, or the slightly lower with anything more than the minimum.
Yeah, so a 10 basis point increase on the monthly mortgage insurance.
Correct.
They're actually increasing the upfront mortgage insurance premium from 1
to 1.75%.
to 1 3/4. So
let's take a look at an example of, say, $250,000 and see how that compares to some other options that we've been talking to you about.
Alright, so your down payment requirements on a $250,000 purchase for conventionals, 5% down is your minimum, which is $12,500. FHA, 3.5% down would be $8,750. Now here's your MI difference, your monthly mortgage insurance difference. Conventional would be $132 versus
this new premium.
The new premium of 125 basis points. FHA would be $251 a month, which is a $118 difference in monthly payment. Not to mention the new upfront mortgage insurance premium of 1 3/4 would be $4,221.
Additional that they're financing.
Additional finance, yeah.
So, and one other option that we can offer your buyers is the no PMI option that we've kind of been talking about, just for a little bit more money, actually about $5,106 versus the upfront mortgage insurance with FHA, $4,221, for about an extra $900. They can, on a conventional loan, completely buy out the PMI insurance.
Yeah, saving you that $251 a month.
Absolutely.
It's a great option.
Last but not least, we figured we'd share a press release from Monday with you, where HUD is actually alleging that Bank of America is discriminating against borrowers with disabilities.
Okay. HUD Assistant Secretary for Fair Housing and Equal Opportunity said in this press release, verbatim, holding homebuyers with disabilities to a higher standard just because they rely on disability payments as a source of income is against the law.
How ironic is that when in the HUD FHA guidelines 4155 section 2.7 it says the income of each borrower to be obligated on the mortgage debt must be analyzed to determine whether it can be reasonably expected to continue for at least the first three years of the mortgage.
So it must be analyzed, it must be determined that that income will continue.
Therefore, documentation may be needed.
Hey guys, we'll keep you posted on how these charges go against Bank of America. I don't think HUD will do very well because it's right in HUD's guidelines that the documentation must be there for at least 3 years.
Sure. Hey, thanks for joining us this week. Do us a favor. If you liked the video, send it along to someone you know. If you didn't like the video, send it along anyway. And if you have any comments or questions, leave them for us below. And thanks for joining us. Have a good week.